never sold an option before and you want to see what it looks like in real life to collect almost $500 in premium selling options on 3 quality stocks under $100 a share, stick around. Today I'm going to show you with real numbers, real stocks, no theory, no hype. The first thing you're going to need is 3 things. You're going to need a brokerage account with options clearance. Today, I'm going to show you tastytrade. I like tastytrade a lot. I think it's great for option selling. I also use thinkorswim from Schwab every single day. Those are my 2 main platforms, but it doesn't matter if you're using IBKR or you could even be using Robinhood. The options chain itself, it might look a little bit different, but the numbers, the bid, the ask columns that are most important, they're always there for us. Now I'm going to slow it down for the beginners. I want you to see exactly what this looks like. You also need a charting software. Now, most brokers have charts built into them. I'm going to be using TradingView today. And the reason I like TradingView is I have alerts set up. I have alerts set up for different price levels, for different conditions. So I don't have to keep looking at the charts. I use the software of TradingView to save me time, which gives me more of my time back. You're also going to need some cash. Without cash in your brokerage account, you should not be selling puts. Today, we're going to be looking at stocks under $100. If the stock was $100 a share, you need $10,000 in your brokerage account in case you get put 100 shares of the stock. Stocks come in all prices. You can find $8 stocks, $9 stocks, 20, 30, 40. I like to stick with stocks under 100 when we're first starting out because that gives you more options. You should never put all of your capital into a single trade. That's not good risk management. We like a little diversification. That's why I've picked 3 stocks today. We're going to talk about them right now. So I went through my watch list and I pulled out 3 really interesting stocks for us to sell puts on. ServiceNow is a software company. Software is getting pretty beat up at the moment. The stock is down. We're going to look at Uber. I think everyone knows what Uber does, how Uber makes money. If you don't, it's a ride sharing system. It's a ride sharing software where you can get rides, you can get food delivered. It's a good quality stock that's under $100. And we're going to talk about Kroger, a boring grocery store. This is what diversification looks like. Some software, ride shares, and a grocery store. That's diversification. Now, this is TradingView. Like I said, we're going to start with ServiceNow. As you can see on the chart, ServiceNow has gotten pretty beat up. The stock is trading at $100. The stock is trading at $100.74. It's come off of its highs of $230, $240. What I do on the chart, I don't make this super complicated. I look for areas where the stock has bounced before and reversed. This is called support and resistance. So you can see I put these lines on my chart, which gives me very easy ways to determine where has the stock moved before. You can kind of see here, we had some bounces here, bounces. It went a little bit below. It kind of hit some resistance support. But do you see how where my purple lines are? We have bouncing, we have kind of reverses. You can see the reversals here, the reversals here. So this is what they call resistance, but then resistance becomes support. Kind of the same thing. When we look at the recent weeks of ServiceNow, look, we have a couple months of down days. This is a great time to sell puts on a stock when everyone else is selling their shares, when people are getting out of ServiceNow because they're worried that AI is going to take over this platform. There is a lot of fear built into the stock. How do we know that? We can see it when we look at the options chain. Let me hop over to tastytrade. Like I said, most platforms are about the same, but they're a little bit different in the actual user interface. So I've already typed in ServiceNow. If you didn't, you type in ServiceNow here, you click on it, and you can see all of the options expirations for ServiceNow. I like to target 30 to 45 days to expiration, and I just look for the regular monthly options expiration. You can see here we have February, March, April, May. I'm looking for 41 DTE. You see it on the screen? I'm pointing at it. So I'll click on this and I will look where I see around 20 deltas. Now, the reason I use Delta is because it gives me a really quick math-based idea of how this option will expire worthless. When we're selling an option, we want it to expire worthless. So if I choose a 20 Delta put, there's an 80% chance this option is going to expire worthless. And if you don't believe me, Tasty Trade makes it really easy. Do you see how on the bid they put sell and on the ask they say buy? Now, I don't buy options, I sell them. If I wanted to sell the 20 Delta put, meaning it should have about an 80% chance that it's going to expire worthless, which is great for an option seller, I would click on the column that has sell. So the 88 strike put has an 82% probability of profit. Tasty Trade is the only platform I know of that actually shows you this, but I just showed you how you can quickly calculate the delta to know your probability of profit. So for this 88 strike put, I can collect, I'm going to go to the mid price. I can collect $240. This is money that goes directly to my account as soon as I hit the submit button, which I have to kind of move a little bit, but this is the submit button here. If I wanted to sell this option, I want to look on the chart and see where does 88 line up. Right now, the stock is trading at 100. 88 is right where I have a purple line at 87, meaning there is weekly support and resistance right here. Let me hop over to the daily chart. It's going to show exactly the same thing, but you can see on our chart that stock's trading at 100. We're looking to get it around 88. That means the stock needs to pull back an additional 12% before we even have to worry about getting assigned shares of this company. Now, if we did get assigned shares of ServiceNow at 88, if we were assigned shares of ServiceNow at about $88, that means the stock has pulled back 63% from its all-time highs. Over half of its value has been lost. That's how you know you're buying low. We're not buying at all-time highs. We are getting paid well over 1% of the strike price for selling this put. What I mean is this is 41 days to expiration. The 88 strike needs to pay at least 88 cents for us to get a 1% return. It needs to pay a little bit more than 88 because it's like a week over 30 days, right? So we would want to make about 90 cents. In this particular case, we're making almost 2.5%, 3%. That's quick math in my head. Every single 30 days. That's really awesome premium. By selling this put, we get paid $240 immediately in our account. This is a trade I've taken in my account. Just because I'm taking a trade, I'm not advocating that you should take the trade. This is for educational purposes only. So I want to teach you how I think about options trading. I'm not encouraging you or recommending any trades in this video. The next stock I wanted to look at was Uber. Same thing. I just typed in Uber in the corner. You can see all of the expirations here on our screen. We're going to still target 41 days to expiration, which in this particular case happens to be March 20th. Now, the March 20th options chain, we're going to, same thing we just did with ServiceNow. We're going to look at the deltas. Okay, the 20 delta is paying us about $1.04, $1.05. Remember, we're going to click on the bid for the strike. This is the delta here, the 20 delta. I want you to pay attention to the 65 delta. Do you see how the 65 delta actually has 63 cents? So not quite 1%, but pretty close to our 1% goal. Now, if we wanted to sell the 67.50 put, this is the 20 delta, means we have like an 80% probability of profit. The next thing we're going to do after we check delta, we want to look at what does 67.50 look like on our chart. We need some support and resistance, because if there's support and resistance, the stock should bounce where it has bounced before. It doesn't always have to, but it's a good indication of, hey, the stock might bounce here and there's an 80% chance this option is going to expire worthless. Typing in Uber in the name here. This Let me get this centered on our screen a little bit before we can chop this part out. 50 puts. Forgive my drawing with the mouse because it's not exactly, about another 10% before we even have to worry about buying shares or getting put shares of this company. In exchange for a 10% pullback. In exchange for a 10% pullback, we're getting paid about $1.04. That's well over the $67.50 that we expected. Not quite 2% for the next 30 days, but it's well over 1%. This is a great probability trade. There's 80% probability this option expires worthless. If you're going to use a 50% target, which is a little bit more advanced, we can talk about in a later video, there's an 88% chance this trade is going to hit our profit target. That doesn't mean it's guaranteed. Even if it's a 98% probability of profit, it doesn't always mean it's guaranteed, but we have support and resistance on our side. This is another $104, $105 that we just collected by agreeing to buy Uber 10% lower than it's trading right now. The third stock we wanted to talk about is the boring grocery store, Kroger. Now, when you're trading boring grocery stores, the premium is not quite as good. This trade for 41 DTE is paying us look at the delta. Remember delta? The 22 delta, so roughly 80% probability, a little bit better than 80% probability of expiring worthless. If you look at this 15 delta, it actually has enough premium to meet our goal of making 60 cents. We're going to make about 63 cents by choosing the mid price here, the middle of these two numbers. 63 cents for the 60 put. There's an 87% chance this option expires worthless. Now let's hop over to the chart, just like we did before. We're gonna look at Kroger on the chart. So let me type in KR. So this is Kroger on the chart. I know that these purple lines are support and resistance. You can kind of see here, resistance had became a little bit of support, but then bounced back down to this resistance, bounced back, came back down. Regardless, we are sitting on the 200 moving day average. Kroger is sitting at about $67.37 a share. Remember, we were going to sell the 60 put. 60 looks really good. We had some previous, Kroger was here a couple of months ago, right? Kroger would have to pull back about 10%, sort of like Uber. In order for us to get put shares, we need a 10% pullback. In exchange for making the agreement to buy Kroger 10% lower than it's trading now, a boring grocery store company, we get paid about $62, $63. This is a great risk to reward trade for me. You can already see that I want to go bullish on some shares of Kroger, but I don't have to use shares. I can just sell a put. And if I'm right, and Kroger bounces and Kroger goes higher, this put is going to expire worthless. I keep the money and I don't have to worry about using my capital to own shares of Kroger. We would go right here. Just like I said before, I would hit the review and submit button here. If I wanted to sell, I would hit the review and submit button if I wanted to sell this 60 put on Kroger. Every trade I take needs to pass a 6-point checklist. Every single one of them. And there really are no exceptions. Number one, does the premium meet the 1% rule for 30 days? In this particular example, all three of our stocks did. I brought them up as we went. Number two, is the strike at or below support? For ServiceNow, for Kroger, for Uber, all of the strikes we chose were 10% lower and there was a purple line near them. Number three, is this delta between 20 and 30? For Kroger, the delta was actually 16. That means it was better than that 20% delta, and we still met our goal of 1%. Number four, are earnings out of the way? Let's look over here at Kroger for 1 second and figure out that earnings fall on March the 5th. We were looking at selling a put on March 20th. In this particular case, this trade does not match our rules. We can't take this particular trade because it is over earnings. The only exception is if you are absolutely positively willing to hold shares of Kroger for the long term, you can make an exception. But for this video, this would not be a trade we can take. Number 5 is this trade a craze or is this a quality company? Now, I chose stocks I know. I didn't find stocks on Reddit that people were talking about. People were losing their minds over these crazy stocks that have great premium. I chose really boring companies I like that are being beat up. That's how you find trades that work for you. Number 6 is, am I happy owning the stock at the price? And for me, the answer is yes. If it were me and I knew long-term that I wanted to own Kroger for years and years, I would sell that put. It depends on your case. You need to have these 6 checkpoints, especially when you're first starting out, to take the trade. So today we are only going to set up 2 of these hypothetical trades because earnings are coming up for Kroger. So what happens next? We get filled on Uber, we get filled on ServiceNow. Maybe you got filled on Kroger or you didn't. So 3 things can happen from here. Best case scenario, we sell a put on Uber and the stock stays up here. We collect our premium, we move on with life. Our option expires worthless. We enter a new trade, maybe on ServiceNow, or we find maybe on Uber, or we just find a different trade. Now, the middle case is that Uber comes down, starts testing our put that we sold. Let's say that Uber goes down to 66, 65. Don't panic until we're closer to expiration. You can always roll a put out in time for an additional credit. But the biggest mistake newer traders make is they try to roll that put too early and they don't wait for, see this little purple line? The resistance and support, they're not exact lines. It could dip below. I like to give it 1 or 2 days to see, is Uber going to do something like this if it goes below? Now, if you're getting super close to expiration, let's say you have anywhere between, 21 days to 7 days to expiration. If Uber does something like this, yeah, you have to make the decision. Do I want to accept shares of Uber like I said I would, which I would, that's why I got in the trade, or can I go ahead and roll these March options out to April and just give myself a little bit more time before I deploy those $6,000 of cash into shares of Uber? That's a decision you have to make. None of these outcomes have to become a disaster. The only way these outcomes become a disaster is if you change your mind when you start getting tested. If Uber were to pull up something like this, which I don't think it will, but anything's possible. If Uber pulls up something like this and you decide, I'm going to buy back the option that I sold for 3 or 4 times more, that's when disaster can happen. If you follow my checklist, if you understand what happens, play it through your mind. What are the worst case scenarios that can happen before you get in the trade? Build yourself a plan, have a checklist. That's how this process works the best. So that's it. That's the whole process. You pick a stock, or maybe you pick a few stocks because you don't want to put all of your money into a single trade. You think about, before you hit submit on the order, you think about the worst case scenario and how you're going to handle it. Make sure you're comfortable owning the stock at the level where you said you would. You enter the trade, you collect a premium, and if this makes sense and you want to see me do this every single week, check out the link in my profile. I have an inner circle. I show trades just like this in real time. The link's in the description. If you want the checklist just like I use, check out my free income replacer blueprint, mrmoneymaxwell.com/start. I'll put the link below in the description as well.